Good morning and welcome to Bazaar Morning Call. I am Anuj, with me Prashant and Sonia. It's Friday and we are starting a new series after putting behind a really sort of treacherous series, especially in the last fortnight. What's interesting this morning though is that the global cues are a bit of a mixed bag. The US markets were down and the equities did see a bit of a risk off despite the dollar retreating. And it's a very sharp retreat that we have seen from the highs of 115 to 112. Yesterday looked like a one-off and it looked like dollar was again inching up, but that's retreated. And one thing which stood out for me really is the old economy stocks making a huge comeback. Yesterday there was a massive moment. The ExxonMobil market cap has moved above Meta after 11 years or so. So just telling you about the kind of shift which is taking place in the global order. Let's see, the SGX Nifty is indicating that on the policy day, we will start with about a 50-55 point downtick and then take it from there. Prashant, Sonia, hi, morning.
Hi, morning, Prashant. Absolutely. I mean, and it's the big policy day today. So, ahead of that, perhaps people may not want to take any big bets. Although I guess the verdict is out. In the sense, people know what to expect this time. They're not going in with their eyes shut, right? Global markets, of course, not looking that great this morning. Dow down about 458 points. The S&P 500 is now closed at a new low, new 52-week low. And, a lot of corporates have sort of voiced concerns about the business. So Nike is the latest one. Nike, the stock was down over 9% in after hours. The company said that supply chain, inventory issues, a stronger dollar, higher discounts are all hurting earnings. Although the numbers for this quarter were not too bad, but going forward there is some caution on board. So corporate USA is getting hurt at the moment, which I think is matter to take on board. For our own markets as well, FIs have sold a large amount of almost 2,700 crores in the cash markets. DIs bought about 2,500 crores or so. In the September series, as Anuj was pointing out, it was quite a tough one. The Nifty was down over 700 points. We kickstart a brand new series today. We start off with the RBI policy today, where there's more than the 50 basis points rate hike. Any change in the stance to hawkish will be watched very closely. We also have the auto sales numbers tomorrow. And over there's a strong growth that's expected across both passenger vehicles and the commercial vehicle segment. So keep that in mind. But Anuj, this reminds me of a couple of the bear markets that we had in the last few years, when in hindsight that was the best opportunity for retail to sort of park their money or invest on dips. Do you think this time could be different?
I think, Sonia, my view has been very clear. This is a market to buy in terms of portfolio. If you're a trader, you have to respect the screen. But I don't see a Indian bear market, honestly speaking. And in fact, today is just one of those days where my gut feeling is that post-policy, perhaps if the market protects the lows, the Bank Nifty could actually give you a very good risk-reward trade on the long side. It may not work out, but the risk-reward would be extremely in your favor, given the Bank Nifty's recent move. Now, the new series is starting with massive short build-up. I have not seen this kind of shorting by FIIs in a really, really long time. And just to put some numbers in perspective, the FIIs are starting the new series with 1.21 lakh short positions. Only one-third of the longs were covered yesterday on almost every short contract was rolled over, not covered, rolled over. So 1.21 lakh short contracts. And if you just do a basic arithmetic of the contract size and all, it means that the short book from FIs is worth $1.5 billion. And $1.5 billion of shorts in Indian market or at index level. I'm not even going into individual stocks. So, and anecdotally, October marks the end of the downtrend. Though the issue is that how deep is the downtrend? That's something that we don't know, but maybe that's why you want to sort of build portfolios in this market on every decline. The Nifty has given up 45% of the entire rally from the June. I look at close to close data. Now 50% retracement would mean bottom around 16,680, and 66% retracement from 50 to 66% normally is the zone that you look at, would mean a bottom somewhere around 16,250. This is if the market is still maintaining its previous lows and sort of makes a higher bottom, which is my base case. If the market breaks that, then you have to take that into account. But the Bank Nifty, as I said, has to lead any kind of recovery. The Bank Nifty still has some cushion above its 200-day moving average. That comes in about 800 points lower at 36,848. So an index in a bull market going through correction, you normally try to buy as close as possible to 200-day moving average. On the Nifty, because of the weight of the IT index, That's the problem index, and that's why the 200-day moving average of 17,000 actually might act as resistance on the Nifty, like it was acting as some kind of support. But Prashant, what's happening globally?
I mean, I just hope we don't get another session like yesterday, right? Which was neither here nor there. I mean, 15 points, 20 points. I mean, reporting on a market like that is tough.
Very tough.
So global markets, though.
Trading would be, though. If reporting is that tough, trading these.
You can kick back and
moves.
just take a day off, right? I mean, unless, of course, you're compulsively in the market. So global markets are looking disorderly. I mean, I think that's the best way to describe it. It's swinging between hope and despair. There are days like day before yesterday when the market shot up, and for a day it kind of seemed like not all is lost. The title of my piece yesterday at the same time was maybe a temporary bounce. And I think it is been temporary because stocks have plunged once again. The basic reason is very simple. The fragility in the markets is originating because there is lack of an anchor for interest rates. When I say lack of an anchor, I mean there are so many pulls and pushes for where rates should finally settle at. There is, of course, inflation. There is consequently growth, which perhaps will falter at some point in time. So how should markets price that? There is the fisc in many economies, and so on and so forth. I mean, multitude of reasons. And of course, there is no Fed support. I mean, I think, of course, that explains a lot of it. That's the underlay for a lot what is happening right now. You had Fed support. You had, the Fed put, which no longer is there, at least not right now. So rates went up once again. Remember, day before yesterday, the US 10-year lost some 20 basis points. The 2-year, the 5-year, the 10-year all went up 6, 7, 5 basis points respectively. Equities were sharply lower by about 2% and more. The dollar has been surprisingly soft. But mind you, the dollar is, the DXY index, which we track, is from 114 point something. It's down to 112. But the fact is, it's been influenced in an outsized way by the pound, which has rallied, and the euro, which is pulled back as well. So that's put pressure on the dollar index. On Wednesday, the dollar index also formed a bearish pattern, but moves have been so large, you don't know what to make of, whether you should pay too much attention to some of these outside days, both bullish and bearish. But for what it's worth, we had a bearish outside day at trend highs at 114.5 on Wednesday. So we'll see. The fact is, I would say, the impulse is for the dollar to move higher over a period of time. There can be overbought situations, oversold situations that may influence things in the very near term, but the impulse is higher. So that's a dollar. Just in terms of news flow, you had out of UK, the Prime Minister there kind of doubling down on the economic plan with regards to the fiscal easing, which is tax cuts which were announced, so no backing off there, which will at some point again put pressure on the pound, notwithstanding the squeeze higher last night. And today we've got Russian President Putin, who's due to make an announcement. Most likely the market is speculating that it'll be about sort of including some of the annexed territories within the Federation of Russia, which will, in some way give him more powers to defend those territories more aggressively. So this will only mean escalation, not de-escalation. We've already seen moves from the EU, etc., in terms of more sanctions recently, and we've got this lined up later today. The most direct way this shows up, of course, is in energy prices for markets. So keep an eye out on those aspects as well. So it remains tough. Global markets, of course, quite tough. So,
absolutely. And in that context, what the RBI says today on inflation is also extremely crucial. The CPI inflation data, the last take was 7%, much above the RBI's comfort zone of 2 to 6%. So most economists believe that the RBI may perhaps front-load rate hikes. It's not just the amount today, but what the way forward could be. What is their stance on inflation? That's also extremely crucial.
Absolutely. But my sense is, and RBI being prudent that it is, and I have a lot of respect for RBI, Sonia. Look, the reality is that in last two months or so, we have seen a very sharp decline in commodity prices, especially crude prices, right? And in India, crude really forms a large basket of what happens to inflation. And we haven't seen a pass-through in petrol and diesel prices for some time. And my sense is we are near some kind of announcement of a big petrol and diesel price cut. because now oil marketing companies have started to make decent profit once again. They've covered their losses and they've started to make profit. So once you see some kind of a decline in petrol and diesel prices, that automatically trickles down to everything. And in that sense, maybe, and just maybe, we have seen the peak of inflation in India. So in that sense, do you really need rate hikes? I mean, I don't know. Maybe in the RBI says, okay, maybe we don't need aggressive rate hikes from here on. If that happens, I think that would be extremely bullish. So let's see. I mean, keeping our fingers crossed. Of course, we'll hear from the governor soon, and then let's see what he says.
Okay, that made me feel really good, when you said there's a big petrol price cut coming. I mean, veggie inflation at 13%. Of course, prices for everyone has gone up, right? Relatively, perhaps.
But I thought you bought the latest EV, right, Sonia?
I'm thinking of it. Waiting for the charging infrastructure to pick up.
Whenever Sonia says veggie inflation, this I, picture in my head Sonia going to Sabzi market and buy.
Someone's got to pay for it, right? Whether I go to the veggie market or not.